Macro drivers of global property cycles. Understanding the forces that drive property markets across different regions can help investors make informed decisions and anticipate market shifts. Have you ever wondered why property booms seem to happen everywhere at once? Why one market overheats while another stalls? Without grasping the macro forces behind interest rates, inflation, and demographics, you will struggle to time your investments and choose the right markets. But when you understand how central bank policies, inflation trends, and population dynamics drive real estate cycles in the US, the UK, and APAC, you'll spot emerging hotspots, anticipate downturns, and allocate capital to markets with the strongest tailwinds. Step 1. Central bank policies and interest rates. US Federal Reserve, the Fed reserves, 2023, 2022-23 rate hikes. Fed raised rates from nearly 0% to 5.25% to combat inflation. Mortgage rates jumped from 3% to 7% by early 2024. Effect: home sales slowed by 30% year over year. Price growth decelerated from a positive 20% to a positive 2% by Q2 in 2024. Rate moves from 0.1% in late 2021 to 5.25% by mid 2024. Effect: UK house price growth slowed from 15% in 2021 to near flat in 2023. London prime markets saw modest corrections. APAC central banks. What are these? So, Australia, RBA. Cash rate rose from 0.1% to 4.35%, cooling Sydney and Melbourne's 25% price gains in 2021 down to 5% by 2024. Singapore, MAS, tightened policy via currency band rather than rates, slowed price growth from 12% to 3%. Japan, BOJ, maintained ultra low rates. Tokyo market remained resilient but offered lower yields compared to neighbors. Step 2. Inflation and real returns. Inflation impact and using real estate as hedge. When inflation hit 8 to 9% in 2022, real assets like in property protected purchasing power. Rents and prices rose in nominal terms. Cost pressure, rising construction and maintenance costs trimmed developer margins, slowing new supply and supporting existing property values. This is interesting. The resources are the US CPI data available on www.bls.gov/CPI and the UK ONS inflation reports available on www.ons.gov.uk/economy/inflation and price indices. Then comes the demographic tailwinds. Population growth and urbanization. US. Millennials entering prime home buying age drove suburban and secondary market rental demand in major cities. APAC. Rapid urbanization in Vietnam, Indonesia, and continued foreign investment in Singapore and Sydney. Let's take a case in point. Phoenix, Arizona. 20% population growth in 2020 to 2023. 30% home price gains. Manchester, UK. 10% increase in student or tech worker influx, rental growth. So that's very clear. If there's a population growth of 20% in Phoenix between 2022-2023, there was a 30% home price gains. In Manchester, UK, a 10% rise in student tech worker. A quick exercise for you in ChatGPT. Enter. Summarize how rising US interest rates impacted the housing market in 2022 to 2024, including effects on sales volume, price growth, and mortgage accessibility. Save the AI summary in your Module 3 workbook. You will use it to compare US and UK responses in the next lecture. Global property cycles don't happen in isolation. They are shaped by certain central banks, inflation, and people. Master these drivers to pick markets that align with your investment goals. Run the ChatGPT exercise and paste your summary into your notes. And reflect which macro driver surprised you the most.